In this video, we will discuss what is the market profile, how the market profile is taking shape, and some of the use cases that we are implementing market profile in our trading. So what is the market profile? The market profile is simply a distribution curve, and all the distribution curve does is organize data, okay? So if you take the shape right here, you can see a distribution curve, and the value area is, 70% of this trading activity occurred inside this area right here. This is what scientists have done for years to organize data. Once the data is organized, you have a better opportunity or easier to extract relevant information from that data. So if this is a database, we can see that the most trading activity occurred in this box right here, which is the value area, and less market activity occurred on the sides, as you can see here. So the market profile alone does not tell you where to buy and sell. All it is a tool that helps you organize the market data. Again, the market profile is not a trading strategy by itself. It's a tool that helps us organize that data. Organizing data in 3 dimensions, basically. We have time and we have price on this scale right here, okay? So candlesticks charts are linear and do not record the true extent of market activity. Specifically, volume and the time spent at different levels are not recorded. Market profile gives us all the different places the market has traded in any given day. So if you take this day right here, you can see the time spent in this level and the volume, especially using paired with a volume profile on the side. You can see very little activity right here. So let's move on to the next slide and see some of the formation and how this takes place, okay? So right here you can see the candlesticks, okay? You have the normal candlesticks, everyone is familiar with them. And right here we have a split profile, and this is what the collapse format looks like. This is what you've seen mostly around, okay? So if you take this bar right here, this is married to this A period right here. So each period basically is each of these capital letters, okay? And each period of the market profile is 30 minutes. This is the 30-minute candlesticks, okay? And each candlestick that you see here is married to one of these periods. So you can see here the A and B periods, it's these 2 candlesticks right here, okay? As you can see here, it counts the wick as well as the body of the candlestick, okay? So if you can see the B period, basically this right here, extended above this C period right here, okay? So this big 2 candlesticks is the D and E periods right here, as you can see. The H period right here is overextended to the upside, and you can see this wick right here. Basically, the A period is from 9:30 until 10 a.m. Okay, we print the letter A in the regular trading hours, and from 10 until 10:30 we print the letter B, and so on. Okay, so this period right here, the A and B, also known as the initial balance periods. Okay, distinguished by this blue line right here. Is 1 hour, okay? So this is 1 hour, 30 and 30 minutes. So it's the exact same thing as the candlestick on the 30-minute time frame, okay? This is the 30-minute time frame candlesticks, and you can see the body and the wick together form this period right here, the same exact thing. The collapse format is what the market profile looks like when it's, visual representation of the distribution curve, okay? So there are different types of distributions. Some are curved like that, the P-shaped formation, the standard distribution and stuff like that, but this is for another video. We are simply showcasing how the market profile is taking information, and you are most familiar with this right here. And again, this is the collapse format. If you take all this thing right here and collapse it, you can see here the same thing. Again, you can see in the collapse format how the A and B period, you can see this little wick right here, and the B period starts to form afterwards, okay? In this profile as well, you can see the highlight of the volume on these letters that we have adjusted in our Sierra suite, and we will move on to the next one. So what is the value area and why it's important to pay attention at value? So this is the standard distribution, as you can see here, and basically the 70%, we count on the market profile 70%, okay? This is the 4 ticks on the ES, and this is the price scale right here. This is where the most value and the fair price occurred. Okay, so the first price of this whole day is the point of control, the time point of control. It's not always the case that the volume will overlap the time of point of control. For this case right here, this is the volume point of control. This is a volume distribution. You can see each tick, in this case the 4 ticks composite. You can see the exact amount of volume traded on each level. In this case, on this C period of this high right here, it was only 40 volume. By distinguish price and value, value helps sort out some of the prices that were less significant on any particular day. So for example, this right here were less significant than for example, the point of control, where you can see and visualize how much volume was traded right here. The more time you spend at a particular price, the more perceived value has at that level. Okay, so taking into consideration this value area, we can see the significant buyers and sellers agreed upon this price and conducted two-way trading. Okay, as price disconnects from value, we can find opportunities. Okay, so if we know that traders agree on this price and the most time that the market has spent is this area right here, as the price moves away from this area, we can find some key opportunities and pair them with strategies. Okay, so if the price has no value right here and the value is down here, the odds are high that we might see a pullback towards this high value area. Okay, so this is why it's so important to pay where the market finds acceptance and rejection in terms of value. If the value is moving higher and the price is moving higher along with it, you can see continuation. But if we get weeks like that with no confirmation that the value is moving higher, more often than not we can see the price moving back inside this value area. Okay, generally the more time you spend at a particular level, the more volume is traded. Again, you can see on the volume profile this key area right here. Let's move to the next one, and the components of market profile. We can see here the value area high, the value area low, the buying tail. Again, a tail is when we have at least two single prints. Okay, the single prints are single periods. As you can see here, we have, this is called a double distribution, and the double distribution is split by the single prints. Okay, so we view each of these days individually. The initial balance is the A and B period. As you can see here, the A period starts and then the B period of extends to the upside, and you can see this blue line right here. The daily open is the green right here, and if it was a poor high, for example, you will not have two single prints of the skies right here. Okay, so to recap, what is market profile going to help you with? It helps us with view the structure of the market, compare one day's structure to another, view relationships between price and value, and view the market with context. Let's proceed with some example on our Sierra suite. So let's have a look at some recent example on ES right here, in terms of why focusing on value instead of price itself is way more important in order to not overextend and not get carried away. Okay, so we can see here this balanced day. Basically, a balanced day is when two-way trading occurs. As you can see here, the moment the price tries to disconnect from the value area, okay, the market quickly returns back towards this high volume area and the point of control. As you can see here, if we understand we are on a balanced day where two-way trading is favorable, okay, we are simply going to play support and resistance. Okay, in this case, instead of here, if we understand we are on a trend day, if you try to buy the market here and you know that the volume is high and the market is moving lower with value as well, if you try to buy, for example, the support here or a prior support that you might find here, you are likely going to get stopped out. Okay, so understanding if the market is on a balance or an imbalanced state is very important. Okay, so this is an imbalanced day and we are moving into a consolidation day where two-way trading, again, you can see the moment the market tries to disconnect from the value, even on this period right here, let's let's split the profile right here. You can see the moment that markets try to get disconnected, the price returns back inside this value area. Okay, so that means if we found an opportunity right here, which will be a good opportunity on this K period, okay, because this was the key period high and the H period low. You can see this formation right here, it was actually a level that we gave as well. Will be a good short opportunity. And you can see the J period, once it reaches this level, it quickly gets back inside. And basically what many traders view the point of control is as a magnet of price many times, okay? And this is a good taking profit level, not something that you're just going to long or short. Maybe the naked point of control play this role, okay? So as you can see here, this is our Sierra suite, and you can see here the J period, this profile right here gave this naked point of control, and guess where the market returned back to. This is the overnight. Let's see the overnight. Very emotional couple days, but you can see the overnight returned back here, and the A period bounced off of this naked point of control. And again, we can see here the value is moving lower, and look here what happens. The moment the value area started to move higher, we can see this relief bounce as well. Okay, so you can see all these days the value was lower. Okay, and the moment we see this, the overlapping values to the upside, we see this as, the market found some acceptance of higher prices. Okay, so then we start to look, for continuation or, the lack of. Okay, again, another example of the tails that we were talking about. You can see here, this profile here does not have a 2 single print tails, and guess what happens in the next day? It moves lower. Okay, it's not always the case, of course, but the odds are high if you have more confluences. Same here, 3 TPO overlapping this high right here. The odds are very high in this case that the market at least initially will try to clear this structure. Okay, and guess what happened the next day? At the open, we move higher despite the fact that we moved lower afterwards. The market cleared this structure right here. What this also tells us is, if you are along somewhere lower, you don't have to close your trade right here. You can expect the market to move higher. This is the scope of the mindset behind reading structure, when using market profile in order to, find continuation, find stuff like that, right? And where the value areas is moving. So if you want access to this exact Sierra suite that you are using every single day in order to perform market analysis using order flow and market profiling, be sure to check our website. We have advanced footprints, advanced market profiling, and of course a 70-page ebook course that you can take that explains an introduction of market profiles, order flow, and market auction. We also have a set of bonus items for one price fee. Thanks for watching.